Welcome to Market Matters. I'm Khoo, Chong, and as usual, I'm joined by Charlotte Chong. Company in the news is Oriental Food Industries Bhd. Now, this company, of course, closed the day at 1.6% lower at 185. About 1.5 million shares traded. Now, the thing is, this company has really run up since last Friday, up about 30% from 144 on Friday last week to 188 and 185 today. Now, of course, as we understand it, investors are chasing the stock because they like food companies. They think such companies are going to be the target of many affections post-budget 2016.
I really like this company because they basically produce the best snack. I mean, I love Super Ring. I'm not sure about you. They have Rota, Jacker, and Oriental as well. But anyway, yesterday the stock actually hit limit up, rising 30% to 1.88 ringgit. And like what you say, investors are chasing food-based company after budget 2016. The government proposed to extend tax incentive for food company until 2020. Now, share price up 161% from 72 cents a year earlier. This company actually was picked as the Edge Research stock with momentum in July this year, and first recommended by Insider Asia in October last year.
So if you had bought when the Edge Research told you to buy,
I would have.
You would have made a lot of money.
Yes.
But of course, basically, according to Kenanga, as far as tax incentives for food makers are concerned, it is a definite positive for them because they're planning to expand the production capacity. And of course, we know that the government is handing out all kinds of brain payments and all kinds of things, incentives. That's going to put a lot more disposable cash into people's hands, and that's going to find their way into consumer food products, such as with Oriental Food.
But the problem is the company is actually not too cheap. If you compare with competitors London Biscuits, their PE ratio is at 17.92 times. London Biscuit, it's at 10.07 times, and Apollo Food at 12.74 times. Yeah,
correct. They've also, other than being expensive, they've also completed a bonus issue and share split in September. Their share capital has expanded to 240 million shares from 60 million previously, which is way too small.
In its first quarter ended June this year, actually net profit up 87.9% to 6 million, revenue down 6.4% to 56.7 million ringgit.
So in other words, if you're the MD chief executive, Dato' Son Chen Chuan, who owns 31% of the stake, you would be smiling all the way to the bank. So in terms of the three reasons why it all matters for the company, the shares have been surging up by 30% from 144 to 188 since last Friday. This is just a 3-day time span. Investors are chasing food-based companies after the raft of tax incentives under Budget 2016. And according to Kenanga, Charlotte, a definite positive for food manufacturers who are planning to expand production capacity. Let's switch along to some brokers' call, and this information comes to you from Kenanga Investment Research. They've looked at Mitrajaya Holdings Bhd, the construction firm. They closed the day 1% higher to 121. And the news in the market is that this company has bought another tract of land in South Africa, of all places.
So Kenanga Research actually maintained an overweight rating with an unchanged target price of 1.63. When we look at the earnings this year, second quarter of ended June this year, net profit actually up 70% to 23 million ringgit, revenue up 80.5% to 243.2 million ringgit.
So in terms of Mitrajaya, they're not going to sit pretty on their existing South Africa project, which is called the Blue Valley Golden Country Estate. They've got 300 hectares there. They've plonked down 12.2 million ringgit for 215 acres of freehold land next to, in fact, in the western suburbs of Pretoria.
And it's very close to Lanseria Airport.
But get this, the price per square foot for their cost of purchase is 1 ringgit per square foot. Now that's near zero.
But Kenanga is actually quite surprised by this acquisition because they expect the company to focus on its existing 300 hectare South Africa project. They have the project that you say, Blue Valley Gold and Country Estate.
Now, of course, they wanted the bought land is to develop an eco-park residential estate with at least 1,600 units of medium to high density cluster apartment homes to be built. There's an estimated GDV of about 500 million ringgit, but because Kenanga are quite a conservative bunch, they've put the GDV assumptions of only 15% of this project, so that only means 80 million ringgit.
Now, Kenanga also expect net gearing to inch up to 0.26 times post-acquisition, but that's okay because it's still within their comfortable net gearing level of 0.5 times.
I don't know, whenever people say South Africa, people, visions of crime and unrest comes to mind. It doesn't strike me as a peaceful place to live. But maybe for those people who do live there, it remains a beautiful country.
But it's also one of the emerging markets where you can actually see a lot of funds going into the country to build it up.
It is, and yeah, there's a bit of trivia, right? South Africa GNI per capita is very, very similar to Malaysia, so where that is concerned. Okay, let's wrap it all up then, of course, for Mitrajaya. They propose to acquire 215-acre freehold land in South Africa, paying 12.2 million ringgit. They already have an existing 300-hectare South Africa project called the Blue Valley Gold and Country Estate, and Kenanga Investment Research maintain an overweight rating and unchanged target price of 1 ringgit 63 cent for Mitrajaya Holdings Bhd. That's a wrap from us, from me and Charlotte Chong, and of course I'm Khoo Chong. If you want more, go to theedgeresearch.com or theedgemarkets.com or pick up a physical copy of the paper from newsstands. Thank you for watching. Good day and good night.